Good afternoon, everyone. So recently, everybody is talking about the coronavirus, and we're also going to talk about corona, but the main topic is not about the virus. It's about VJC Air, a company that is directly affected by the virus outbreak. So in these presentations, after the basic information and investment summary, we're going to look at the business descriptions and management and governance. We also discuss the industry overview and the competitive positionings before moving on to the valuation, accompanied by a financial analysis and an investment risk analysis. We shall start with some basic information. VJC Aviation Joint Stock Company engages in the provision of domestic and international air transportation services. The company was founded on July 23, 2007, and is headquartered in Hanoi, Vietnam. The company's ticker symbol is VJC, and the primary exchange is Ho Chi Minh City Stock Exchange. The CEO is Nguyễn Thị Phương Thảo. She recently reached Forbes 100 Most Powerful Women in 2019. She's also the second biggest shareholder in the company. VJC also received investment from foreign investors, in which we can see here the biggest is the government of Singapore with nearly 5% share. Now, let's take a look into how well this billionaire woman is doing her business. Currently, VJC stocks are being traded at 95,300 Vietnam dong, which translates to a more than 53,100 billion market capitalizations. We can see that the stock price is at a very low point due to the impact of the outbreak of COVID-19. However, VJC Air is not alone. Many other companies in other sectors are also suffering. Before the outbreak, VJC was actually performing really well. This is a strong reason why we still recommend the investor to hold the VJC stocks. Our target price is 106,000 Vietnam dong, compared with the current price of 95,300 Vietnam dong. Moving on to the business descriptions, VJC Air started its operation in 2011. In 2012, it expanded domestic routes to Vinh, Đà Nẵng, Nha Trang, Đà Lạt, Phú Quốc, and Hải Phòng. And in 2013, it opened the first international flights to Bangkok, while keep expanding domestic routes to Quy Nhơn and Buôn Ma Thuột. After 8 years, VJC has 95 air routes and has already signed to buy nearly 400 aircrafts. The monopoly of Vietnam Airlines Corporation in aviation market disappeared when VJC joined the game, and this has made Vietnam's aviation market among the fastest growing groups in the world in both domestic and international markets. The key success factor of VJC Air is their low-cost carrier model. Ticket prices of low-cost carrier are much lower than those of the traditional model full-service carrier, which seems to attract many customers due to its reasonable and suitable prices for the average income of Vietnamese people. VJC has operated in low-cost carrier with revenue coming three main sources: passenger transportation, ancillary services segment, and sales and leaseback. Others include revenue from AC rentals, training, purchase of ride options, and financing services. In 2019, VJC pushed a strategy of supporting ancillary revenue with a growth of 35% to 11,356 Vietnam dong billion. Next, we're going to look at the management and governance. VJC has a current charter capital of 5,416 billion Vietnam dong, in which domestic shareholders hold 78.35% and the foreigners have the rest. VJC's abilities of financial and corporate governance are proved by good business performances. VJC has been awarded for the second time with 2 awards, including the Best Financial Management in Transportation Industry and Top 10 Corporate Governance Company on the Vietnamese stock exchanges. The Corporate Governance Scorecard is based on the Vietnam Corporate Governance Scorecard. In the first year of assessment, VJC was recognized by 105 standards, implemented 1 standard partially, and 6 standards out of 112 evaluated targets have not been met. We're going to continue with the industry overview and competitive positioning. The first key point is the rise of low-cost airline model. The development of low-cost aviation model expands in the 21st century aviation industry, making air travel more affordable. Low-cost carriers grew faster than the industry average in 2018, with its market share increase in both developed and developing countries' market. The competitive advantage of this model is cost-cutting, revenue expansion through new types of services, and operational efficiency. Low-cost carriers are predicted to continue to lead the aviation market in the upcoming years. Vietjet Air's rapid growth story is a clear evidence of the leading development of the low-cost airline models. The period of 2012 to 2016 marked a great leap forward of Vietjet, with continuously increasing in the market share of domestic passengers. The second notable point is the competition among airlines continued to be harder, with many new airlines entering the market. Only in 2018 and 2019, Vinpearl Air, Vietravel Airlines, and Kai Air has applied for the permission to join the aviation market despite the difficult barriers of entry. So it seems that there are still opportunities and potential for growth in this market. Bamboo Airways entered the market and increased its market share just within a year, reaching 4.2% in the first 6 months of 2019 and reported a profit of over 300 billion Vietnam dong. However, Vietjet Air continues to grow, with the number of operating flights increasing by 14% over the same period compared to the last year, increasing its market share to 44%. At the same time, the ancillary revenue increased sharply. Ancillary revenue mainly includes the revenue from baggage consignment and surcharges, cargo transfer, sales revenue on aircrafts, and advertising revenue. Low-cost carriers use ancillary services as the main source of revenue. Ancillary revenue currently accounts for 28% of Vietjet's total revenue in 2019, up from 24.9% in 2018. In the Asia-Pacific region, Vietjet Air has quite high ancillary revenue per passengers, which reached $15.82 per passengers, compared with the industry average of only $11.25 per passengers in 2018. An important event is the outbreak of the coronavirus. There are two scenarios for Vietnam aviation industry. In the best case, the disease will be controlled before April 2020, and Vietnam Aviation Administration proposed a total market scenario will reach 67 million passengers, down 50.4% compared to 2019. In the worst case, the disease will be controlled before June 2020, taking into account the cancellation of all flights to South Korea, and the total market was only 62 million passengers, down 22.6%. Unluckily, the two most important markets of the Vietnam aviation industry are both the top countries where the situation of corona is the most serious. China accounts for 25% of Vietnam aviation industry output, while Korea market accounts for 22.1% of international passengers. Continue with the competitive positionings. Vietnam aviation has one of the highest passenger growth rates in the world, and also the cost of travel by air is quite competitive. Vietnam has extensive network of flight routes and at the same time has 20 years of civil aviation safety. However, there are still weaknesses available. The first one is the infrastructure has not kept up with the development needs of the aviation industry. And secondly, the airport planning is still weak. There are still other threats to the industry. The biggest one is the penetrations to Vietnam market by regional airlines, while there are also opportunities available. Long Thanh International Airport projects is expected to be completed in 2025, and the cooperation agreements have been made with international units. Also, there are more challenges coming from the suppliers and the customers. The power of suppliers is high because the market for units supplying aircraft and engines are highly concentrated. Exclusive airport operations and airport services are operated by a small group of companies. and however, the switching cost is not high. The power of customer is also high. The customer are not loyal and very sensitive to price, while at the same time the switching cost in the industry is low. The aviation industry in Vietnam also has so much potentials. The domestic passenger market is forecasted to grow at 9.5% per year for the period of 2018 to 2025, with the growth momentum from the increase in people's income, the golden population structure with the proportion of middle class increase, and the remaining low proportion of domestic passengers to total populations. Therefore, the demand for air travel will increase along with the increase in the customer purchasing power. Next, we're going to perform a valuation. We have two main valuation methods of discounted cash flow and comparable companies. We reach a target price of 106,000 Vietnam dong. The risk-free rates are acquired from the Ministry of Finance. This is the rate of the government bond of 15 years released in December 2019. The long-term growth rate is the average rate of inflation in the previous 10 years. For the comparable companies method, we have 10 other low-cost carrier airlines with their market capitalizations along with their multiples. The multiple average of 7 will be taken as the multiple for Vietjet Air. Another important projection needs to be clarified, which is the revenue projection. We projected that the revenue of Vietjet Air will be down by 23.5% compared with the previous year. This is based on the impact of coronavirus. Given the current situation of the virus, which cannot be controlled until June, according to the scenario set by the Vietnam Aviation Administration, the February and March earnings forecast of most companies in the aviation industry will be losses, and these losses can last until the end of the second quarter of 2020. We have a quick forecasting. So, in the 12 months of service in 2020, the aviation industry will lose 40 to 70% of revenue in the next 5 months. So on average, companies in the industry will suffer a decrease of 17 to 30% of revenue if in the second half of the year they can fully recover as before the outbreak of COVID-19. So 23.5% is the average of the range between 17 and 30%. The next part is the financial analysis. Vietjet Air enjoyed consistent growth from core sectors. The 2018 revenue was 52,388 billion, gaining 23.8 billion year over year, which is a sixth consecutive growth since the first flight in 2012. 2018 gross profit hit 14.4%, losing 1% over 2017, resulting from a decrease in the gross revenue from selling aircrafts. Financial and management expenses are maintained at 2% of total revenue. Net profit after tax in 2018 reached 5,217 billion Vietnam dong, climbing 2.8%. At the same time, Vietjet sustained the profitability. Profitability's ratio showed a sustainable upward trend over years thanks to the reasonable business strategy of concentrating on high profit margin segments, especially sales of ancillary service activities. 2018 gross profit hit 14.4%, losing 1% over 2017, resulting from a decrease in the gross revenue from selling aircrafts. Financial and management expenses are maintained at 2% of total revenue also. The return of equity of Vietjet is attractive and also less risky. Vietjet Air's return on equity has remained high and attractive, which is mostly driven by continually improved operating margin. After reaching the peak in 2015, we also expect a slight decrease in Vietjet ROE from 2016 to 2018 due to the emulation of other competitors such as Vietnam Airlines and the emergence of Bamboo Airways. However, Vietjet's ROE still remained high at 43.3% in 2018. Vietjet is also improving solvency. Vietjet Air would improve the financial condition and experience a solid balance sheet as the D/E ratio and financial leverage decrease gradually. The final part is investment risks. Vietjet Air suffered from two risks. The first risk is from oil price fluctuation. The main fuel, which is oil, accounts for the largest proportion, about 42% of Vietjet's operating cost structure. The unstable supply and demand balance in the world, especially after the OPEC's decision on supply cuts and sanctions against Iran, may lead to an upward trend in oil price in 2020. We assess the impact of oil prices on Vietjet business activities at the average level. The second risk comes from the sales and leaseback operations with high renting costs and new aircraft orders. So this risk will be the most serious when the economy getting weaker. During a recession, there will be less customer demanding the airline transportations, but Vietjet will still have to bear the high amount of renting costs. Last but not least, there is a threat of the corona translations. With the coronavirus outbreak continuing to spread around the globe, the aviation industry is being daunted. Airline stock dropped sharply on Thursday as investors reckon with the prospect of cancelled flights, lot sales, and substantial reductions in service for months to come. According to preliminary estimates of Vietnamese Aviation Department, COVID-19 could affect the revenue of Vietnamese aviation firms by about 25,000 billion Vietnam dong. So, this is also the end of our analysis and valuation. Despite a period full of uncertainties ahead, we believe that with a strong core businesses and a favorable business environment, in the long term, Vietjet will recover and gain back its growing momentum. Thank you for listening.